Welcome to the webinar. Today's topic is access to finance, and I'm delighted we have two guest speakers joining us today. Firstly, Mike McCulloch, who's the Supply Chain External Engagement Manager from Jaguar Land Rover, and also Karen Rimmer, who's Head of Manufacturing at Yorkshire Bank. Just before we hand over to our guest speakers, as usual, some housekeeping. During the presentation, everyone will be muted so that we can hear the presenters. There will be a Q&A session towards the end of this, and in case anyone has any technical problems, there is a phone number there. If you call that number, hopefully a colleague will be able to help you. Right, without further ado, let me hand over to Mike McCulloch.
Good morning. My role at Jaguar Land Rover is to assist our suppliers, or suppliers in our supply chain, that might not be direct to us, to access finance either privately via the banks, but also by government funds as well. And I also lead on the Access to Finance workstream on the Automotive Council. Now, there are many people like myself within the automotive industry, within the OEMs. It's quite a unique role, and it's arisen because of the strong growth that we're currently getting within the automotive industry, and good production figures out today from the SMMT showing that we're at a 7-year high, and I'm quite sure that's going to continue to go forward. Now, I'm often challenged being on the Automotive Council of what we've actually achieved. So I'm just going to do a quick focus on the particular work stream on access to finance and some of the core areas where we've been working hard over the last 3 to 5 years. One of the key things is promoting the success and understanding of our industry with the providers of finance. And I've spoken to all of the 5 major British banks within our plants, and also to many challenger banks as well, and many challenger access to finance routes, of which I probably would count Yorkshire Bank as being one of them, and we'll hear from them soon. This in turn has resulted in some unexpected benefits for myself. One of the most unexpected ones is that I actually get introduced to my own suppliers. And you think I'd know who my suppliers are, and I certainly do on the tier 1 level, but I don't on the 2nd and 1st tier levels. And they need help just as much, if not more so, than our tier 1s. In addition, we've promoted different types of finance, as well as bank funding. There's also equity funding. And I was actually out at a supplier just on Friday, VTL, talking about their growth plans and supporting that further. And they were the first users of the Business Growth Fund, and that's certainly helped them to rapidly expand and become a supplier to Jaguar Land Rover. And we've also generated and lobbied for government funds, whether it's loans, such as the National Tooling Loan Fund, or grants, such as the Long-Term Automotive Supply Chain Competitiveness Fund, and funds that come out of the Automotive Council seem to go for 5-letter acronyms, unfortunately. Now, the banks themselves have also been very active, especially after me talking to them, and I often like to say imitation is the best form of flattery. And they've been producing their own funds as well, so we hope to hear some good news on progress from Yorkshire Bank as well. Now, where has that growth arisen? Where's it coming from? And it's come from several different areas. It's come from market demand. It's come from product expansion, not just Jaguar Land Rover, but with a lot of the luxury brands in the UK. AML, Bentley, Rolls-Royce certainly are in process of expanding their offering into the UK market with UK production. And it's coming through new technologies as well, as new powertrains have to be delivered with greater levels and better levels of CO2. And through investment in skills, we must also remember that we don't just invest in plant and machinery and in capacity, we also need to invest in our people at the same time. And actually I have a counterpart who actually works very closely with myself called Rita Davey, who's there to help our suppliers invest in skills. Now, the UK has done very well in terms of its ability to compete, and if we look at the Jaguar XE, we've actually seen an increase in the level of UK sourcing from 50% to 55%, which means that they've competed well, because no one's actually offering a free ride to UK suppliers. This is a global industry. All the key OEMs in the UK are globally owned. In fact, if you were to measure who is the biggest British OEM, you'd probably find it's someone like McLaren. So you have to go down to that level before you get to a British-owned company. So all the big players, or certainly the big six, are all foreign-owned, including Jaguar and Land Rover, and therefore we compete globally. Now, SMEs are an important part of that supply chain, and you'll notice that I've actually said just over 100 UK second-tier SMEs have been sourced on the Jaguar XE. Well, the truth is, I don't know how many. It could be 1,000, it could be 2,000. And that's actually one of the things that I'm actively trying to find out, to get a greater level of granularity of what's going on deeper into the supply chain within the UK. Now, in the last 5 years, Jaguar Land Rover has put in investments of 10 billion, and our UK suppliers, I can see, have matched, not pound for pound, but certainly matching that investment in the UK, and I can quickly see through their accounts of 2 billion investment that's been put in support of our vehicle programs. Now, this slide's the most important message that I have for today, and that's we're in a position now of a relatively new government, an experienced government because they served as part of the coalition in the last administration, and I would like to say that working with the last administration has been a very fruitful time to work in collaboration with government through the Automotive Council, and that was indeed led by Vince Cable. We now have a new leader in Sajid Javid, and they're busy looking at what their policies are going forward. So all of us here around this table and on this webinar today have a role to lobby and continue to lobby for the changes that we want from government going forward. And I'd certainly like to hear your ideas in the question time on that particular point. And it's very important as we go into a free market-led government that we lobby hard for investment, collaborative investment with government. Over the last 5 years, a quick calculation shows that for every £1 that was invested through Regional Growth Fund, Advanced Manufacturing Supply Chain Initiative, and many other grants, that £1 has generated a further £1 every year from once that investment has been put in through increased income tax, national insurance, and reduced social security costs. So this is an investment that pays dividends for governments going forwards. And what should we be looking at next? That's another question that I've got for you going forwards. Should it be alternative finance? Or should we just continue doing what we've been doing over the last 5 years? Now, one of the questions which I want to get floated just to the audience immediately is to say, well, Mike, as a representative of the Automotive Council Access to Finance, has there been an improvement in the level of lending and funding coming through from the banks? And I think that question will pop up any minute now, and I'll probably just ask Jürgen to explain how to answer that.
So the question again is, do you think access to funding from banks has improved over the last 3 years? Just simply select yes or no. We'll give you a few seconds, and then we will see what the results are. Okay, and I think we're pretty much there. Surprising answer there, Mike. 92% say yes, 8% say no.
Which overall that's quite positive, so that's good to hear. But there is a level of negativity there, and it's that part of the supply chain where our work needs to continue and needs to continue to focus to make sure that we can fund for growth going forward.
I'm sure if we'd asked that question, say 3, 4, 5 years ago, the answer would be very different from what it is today. So that's a really, really positive response. And it seems like, you know, the banks are stepping up and being more supportive of the industry, which kind of nicely gets me to the next speaker. I'm going to now hand over to Kevin.
Thanks, Young, and thanks, Michael. Look, the vote is very pleasing to see, I think, from the bank's perspective, although I think there's still a lot of work to do to understand the industry and get our message across. And I'm sure Young's right. If we'd have asked that question 2 or 3 years ago, I think it would probably have been reversed completely, and it would have probably have been as high as 90% saying, no, we don't. As Young said at the start, I head up the manufacturing team at Yorkshire Bank, and part of that remit includes automotive. And we've been looking at automotive over the recent past and to see how we can work with the industry to better improve our relationship and what we offer to the industry. During the call, I just want to talk through our approach to the sector, to perhaps give you some considerations that you should have when approaching a bank for finance, what a bank is looking for, and just to try and get a flavour of that type across, and also just demonstrate what we at Clydesdale Yorkshire Bank are doing to help with that growth. We want to work with the industry going forward and to support it, which is a key message from me today. At Yorkshire Bank, we've decided to adopt a specialist approach in that we're going to be looking at a number of niche areas, not just within manufacturing, but across business generally in the UK. As a challenger bank, we recognise that we need to try and look at how we do things differently, because we're not just going to be able to compete with the big 5 banks on a normal basis. So following on from discussions we've been having with a number of partners within the automotive sector, we decided that the automotive sector is very much one that we're keen to look to promote. And that's also due to the background that we've developed within a team within the Birmingham area, where we've got a good level of experience within the automotive sector. So why have we decided to look at automotive? As Michael said, we believe the trends are good. There's good opportunity to grow. The OEMs are growing quickly within the UK, and we recognise that passes challenges down to the supply chain. The OEMs want you to grow quickly and parallel to them. They want you to be looking at the ways that you can help them be more innovative, and also to an extent are expecting that the finance is managed within the supply chain. So that's where we think that we can help, and we, as I said, we like the trends within the industry. Our approach to that is to get to understand the industry better. So we've got a dedicated team that is looking purely at opportunity within automotive industry, and there will also be a relationship director who will specifically manage those relationships going forward, who will understand the industry. Look, we all realise that the industry can be cyclical during times of downturn. We're in a good period now, and long may that last, but at some point there may well be another downturn, and it's about our understanding of that and how we can help manage through that as well, which we think the industry team will help us establish. It's about collaboration as well. So, for example, we've taken membership with the SMMT because that gives us valuable insight to the trends within the industry. We're forming relationships with the OEMs, and not just with Michael at JLR, but looking at how we spread that to the other OEMs across the country. By doing that, we get to understand how they integrate with the industry and how they work with supply chain to try and eliminate some of the risks that we at banks have, and I'll come on to that later. We're also seeing quite a wide range of financing opportunity, whether it's to fund expansion, research and development, tooling finance, asset finance, and increased working capital as turnover grows, import, exports, currency transactions, obviously with the euro at the moment, should you be hedging any exposure across in Europe. And we're also seeing increased appetite for capital transactions, which is a good indicator that the industry is performing well again. If I look at the funding options, as I said, it's about collaboration. It's about understanding the industry. We as a bank understand that there is an element of asset cash richness, but equally you're expected to fund, whether it be tooling, whether it be increased plant at the moment, for which you might not see cash flow for a couple of years down the line. So we will look at an element of cash flow lending to support the asset finance, asset-backed opportunities that are out there. And in order to do that, it's about understanding your relationship with the OEMs, with the industry, and how we can work together. There's also, as Michael said, a number of various non-banking opportunities to look at, whether that's, for example, AMSCI have set up their tooling finance opportunity as well. Michael talked about equity and the British Growth Fund, the supply chain finance, various grants from RGF, although we're just awaiting guidance on the next set of funding around that. And I think it's incumbent on your banking partners to understand what all those funding options are that are available to you, to ensure that when in discussion there's a suitable financial structure that we all arrive at to take things forward. So this means getting to know your financial partners and support as well. I think you should be looking to talk to a range of funders across all types of financing, just to understand what is available to you. For example, R&D tax credits to support research and development. Are you taking advantage of that? So make sure you're talking across the board, and also make sure that your bank is helping you to achieve that. It's about getting to understand your strategy and how you fit in within the industry to take that forward. Just turning over onto industry analysis. The purpose of this slide is to try and demonstrate what a bank is looking at when it starts to assess the credit suitability of a business to look for finance. You normally find that a lot of these will mirror across the industry, so strengths, weaknesses, opportunities, threats. Whilst they won't all match to your businesses individually, you'll find a lot of the traits are similar across the industry. And it's about working with you to understand how you fit within this structure, what your strengths are, what your opportunities are. There will be weaknesses. We've talked about cyclicality within the industry, but it's understanding what those weaknesses are and then understanding what you can do to mitigate those when those circumstances arise. And it's about getting that capability across to the banks. Always look to provide mitigants. So, for example, things that obviously spring to mind. If in the event of a downturn, can you cut your cost structure accordingly and quickly to match that? What is the relationship that you have with the OEMs? Is it across a number of platforms and a number of products? So whilst you might have large concentration to one OEM, actually when you look at that across a number of vehicles, a number of products, whether you're a key supplier, that can add a layer of comfort to the banks when they're looking at putting a financial structure towards you. So I would stress that it's important for you to look at those and then think about how you work with and explain those to the bank going forward. invite funders to come out and visit you and start relationship and talks early. If you're talking to Michael at JLR about a new line, involve your financiers as early as possible so that they can work with you to understand what that structure is and how it can be best worked through. There could be a number of alternatives which you've not thought about previously. The next slide is to try and give a demonstration of what type of information your funders will be looking for when you approach them. I think it's important that you demonstrate your vision and your plan beforehand and how you will measure it going forward. What will a typical plan entail? So some of the things that we're looking for: past financial information. So we're looking for key trends, any margin trend development. So if margins are changing, why is that? What's the key reasons for that? And how have you reacted for that? What are your key sales drivers? And again, how are they going forward? Like I say, at the moment we understand that there's a required to spend cash, but the return for that might not be for 18 months, 2 years down the line. But as long as we can understand the cash flow mechanics of the business, what's supporting that, then we could still look at that as a financing route for you. It's important, as I said, to understand your relationship with the OEMs, but not just the OEMs, with your Tier 1, Tier 2 customer base, and understand the length of relationship, how integrated you are with those businesses, and how important you are to the OEMs going forward. Also, management team as well. I think it's very important that the banks get to understand who your key management members are. So it's not just the finance director, your operations people, that type of thing. Very important that we understand that across the board. I think the banks are keen to establish long working relationships and understand the businesses, and that's a key factor of our industry approach. If I can then just turn forward quickly to rolling tooling finance, and I've put this slide in just to demonstrate how we've worked with the SMMT, with Michael, with the British Bankers Association in looking at how we approach the sector. For a period of time there was a lack of funding available to support things like tooling finance, so you'd have Michael coming along saying, we want you to work with us, develop, but we need you to develop the tools that will progress that, and that involves a financing requirement from you up front. So we've worked with the various bodies to try and understand what that involves. We understand that there is a funding gap which could relate to that, and it's about how you present the plan, as we discussed on the previous slides, to help us understand that. So again, if we just turn the slide, we're looking to provide rolling tooling finance on a relationship basis. We're willing to look at up to 100% finance on a rolling basis. What does a rolling basis mean? It means we don't have to keep on approaching our credit teams every time one of the tools falls away because it's been used and you've moved on to a new program. We can keep that level of funding available to you, provided that we get to understand what the ongoing requirement is, what the new tool is, and how it's going to be used. We'll look to match the repayments to your cash flow and fund tools, whether they're UK or imported, and we'll fund via LOC and invoices. We can have a relatively quick discussion with our credit team, and again, one of the benefits of adopting an industry approach is that we have got our support from our executive team and our credit team as well to roll this program out wider, and we've got a number of points which we will discuss with you. We will then feed them back to our credit team, and we can give you quite an early guidance as to whether this is a suitable product for you to use and whether we can support you. What sort of things are we looking to understand? It's understanding the revenue generation from the tool, when it will arrive, understand the concentration risk, not just by supplier, but as we discussed, by product and by line and by individual models. Length of relationship that you've had with the OEMs. We'll want to understand a look-forward cash flow test, which we can talk about. Do you have other tangible assets which could support? And what is the leverage implication of that? And how important is your product to the OEM? So there are all a number of facts that we will look at in order to make a more detailed assessment. I've included a case study which I won't go into in length, but the best form of promotion we tend to think is from existing customers. So we've worked with CAB Automotive to help them grow aggressively across a number of areas over the recent past, including products such as tooling finance, asset finance, plant finance, treasury mitigation, and I'm pleased to say that they're comfortable enough to recommend our approach to you. So I think that sums up where we are. As a bank, automotive is a key industry to us. We're trying to demonstrate that by forming relationships across the board with a number of key industry players such as the OEMs, SMMT, and we want to understand what your requirements are. And I think leading on to that, there's just a question which again Young is going to put, and I'd be grateful for any comments about how we can improve the message that we put across in the industry. Thanks.
Thank you very much, Kevin. Right, so just before we go to the Q&A session, we'll do another quick snapshot poll. And the question is, do you think the message about banks adopting an industry approach is understood? Do you think the message about banks adopting an industry approach is understood? Yes or no? I'll give you a few seconds and then we'll announce the results of that. Right, okay. And the results are about 80% yes and about 20% no. Is that surprising?
I think when you look at the previous vote, which said that that about 90% thought that finance was more easily available, then perhaps we could have expected it to be more towards that. But I think that just shows that we've got a lot more work to do. We want to try and get that message out, and I'm more than interested in hearing from you guys what we can do to try and do that. And just to give some examples of what we're doing, we will do site visits to the OEMs, arrange for our clients to go out and visit to them, get to understand the industry better. We held an industry dinner last week, which was very well attended by 20 people. We're keen to get involved with the SMMT, run this type of event. But if you think that there's anything else that we can be doing to get that message across, or if the message that we're getting across isn't quite right, we could do things better, then more than interested to hear from you.
Okay, great. Right, let's move on to the Q&A session. So for those who haven't participated in a webinar with us before, there's two ways you can ask a question. You can do it over the phone by clicking on that symbol, which you'll see on your screen, and that way we'll come to you and you can ask the question directly over the phone, or you can type the question into the message box and we will try and come back to you as soon as we can. So whilst you're thinking of your question, maybe perhaps I can start. Mike, just thinking about the JLR supply chain, and I guess also the wider UK supply base, how much of an issue do you think access to finance is still for the industry?
While there's still growth continuing, which is the situation that we still have, and when they're launching new vehicles with the F-Pace, the XC that's just gone out, and there's hopefully further vehicles to come, then credit lines and credit facilities have to continue to increase to fund that working capital and to fund that investment. So access to finance remains an important issue. This is not the time to sit on our laurels to say, tick, that's that subject dealt with, let's move on to something else. And in fact, that's the very question that I asked at our last Automotive Council meeting, to say, can we move on to something else now, other than access to finance? And the answer came back quite unanimously and quite strongly, no, you need to keep on pushing on this, pushing the momentum so it doesn't go away. There's other things that we can strengthen as well, things that Kevin alluded to when he was talking about how do you prepare for the cycles that inevitably go on within an economy. How do you prepare for a downturn in one market and an upturn in another market? How do you deal with the fluctuations in exchange rates? So it's a subject area which I battled quite hard to get on the agenda for the UK Automotive Council, and it's one that's not going away, so we need to keep the momentum going on it. Okay,
good. And perhaps, Kevin, one for you. So from your experience and the work that you're doing with your clients, what seems to be some of the issues that they're coming to you for? Is it, for example, tooling? Is it working capital? What's the popular things that you're hearing from the SMEs and some of your clients?
I think it's a mix of things at the moment, and I think that the key thing, as we've heard, the OEMs are expanding very quickly at the moment. We're in a strong period of time. It's how can they finance that growth element that's there, but may not be repayable for 18 months' time. So how can the banks help support them make the initial investment, and then beyond that understand that repayment could be coming 18 months down the line? So for example, again at Yorkshire Bank, we've got a number of initiatives there. We will look at up to 100% LTV for trading property, where you're looking to buy a new trading property. We'll look at capital repayment holidays of up to 2 years. The SME market is very key to Yorkshire Bank. It is our main market, and we have to try and demonstrate that we can adapt and provide solutions to help businesses grow at the time of need. So I think there is an increasing funding requirement now, which is growth-based, which is very positive. It's how do they maximise their assets, their working capital, in order to be able to put that to good use to grow, rather than have the capital tied up within the business.
Okay. Just one more, Mike, question for me. You mentioned during your piece about not understanding or having visibility of suppliers past the tier 1. First thing is, why is it important to you, and how important is it?
There's a couple of aspects to this. I think the first aspect is to understand the automotive industry fully. We need to understand who is dependent on the automotive industry in the UK. And in fact, I have an intern working with me who's actually sat next to me at the moment, a guy called Jacob Orton. Say hello, Jacob.
Good morning.
Yeah, and he's helping me try to prove out some figures. We worked on a ratio when we went for government funding recently, that for every job we created in Jaguar Land Rover, we were creating 4 jobs in the direct supply chain into and deeper supply chain into Jaguar Land Rover, as well as an additional 3 jobs in ancillary service areas. Now, that's quite an interesting ratio, and those figures came from Oxford University through some research that they did, but I actually want to prove it with some real figures. Now, suppose we start to get down to the employment figures now. If we didn't have automotive manufacturing in the UK, how many jobs would be dependent on that? The SMMT would tell us it's about 800,000. I think that's a little heavy, and probably includes far too much ancillary and attachment areas, although we're going to be working with the SMMT today they're going to show us how that's made up and the names of those people. But it's probably something less than that. So if you take the OEMs, probably employing something like 100,000 people in the UK, give or take, in very round figures. So that would suggest to get to that 800,000 level, that would prove out that figure. But unfortunately, the OEMs don't quite employ as much as 100,000. It's actually less than that. So I think it's probably a figure between 500,000 and 800,000, and we want to actually get to the real number. The second reason, really, to get deep into the supply chain is to understand who actually needs help out there. You know, in terms of my role, who needs support? What support do they need? Getting them known to governments, getting them access to grants. And there's also a risk element as well. We know who's in the supply chain, and I'm quite glad that through this current period, at the moment I can't remember an administration that's taken place, an insolvency proceeding that's taken place in the last 12 months in my supply chain in the last within the UK. There's been some outside the UK in other European countries, but not within the UK. And it's try and know who they are, know who's struggling, and try and provide the support to make sure they don't fail going forward in the future. And that's particularly an area of the access to finance work stream that I'd like to focus on going forwards, but that enters into a much more difficult role of sharing information across independent companies to be able to do that.
Okay, right, let's take a question from Anthony Evans. So his question is, how many years of trading do CYB see as a stable background?
Thanks, Anthony, for that question. Yeah, I think I referred earlier on to us viewing the automotive sector as in a period of stable growth. Why do I say that? How long do I think that will be? It's very difficult to gauge how long it's going to be definitely, but a number of factors go into that conclusion. So, for example, you've got the SMMT releasing another set of encouraging figures and looking for the growth in number of vehicles that will be manufactured in the UK over the next 2 to 3 years to 2 million vehicles per year, which gives us comfort. What's going into that 2 million vehicle number? It's what we're seeing at a number of OEMs, so it's not just JLR, although obviously JLR are doing particularly well. There's a number of new models which we know are going to come on stream, have recently come on stream, driven by environmental issues, technical advancements, various things like that, and also talking to the accountancy professionals, which we do, who operate within the sector. So we think that there's a very definitely a stable outlook for the sector across the next 3 years or so, and hopefully longer than that. Now, there's always going to be key risks within there. One of our key markets is, well, 2 of our key markets, Europe. We've seen what's happened in Europe. China, is the growth slowing in China? The vote on whether we stay in Europe. So there are a number of key issues coming up in there, and we have to accept that when people look at disposable income, then one of the easier ones that they can cut off quickly in times of downturn is they can put off buying that new vehicle for 12 or 18 months. until things recover. So we believe that we are in a stable environment. There are risks that we need to monitor, and that's why we want to adopt and are adopting the industry approach. But also going back to what Michael said as well, I think it's important that as part of the Automotive Council, the discussions we have with the British Bankers Association, that we understand what the key risks are and the key mitigants are, so that if and when we do face another downturn, we learn from what happened last time. So I know that the banks cut off finance for capital reasons, various other things. So it's how do we present the industry in as good a light as possible, not just while things are doing well, but when things are more difficult, and making sure we as a banking profession understand what those risks are and how businesses can manage that, and how they can get support from the OEMs and other industry players. So yes, we think that there is a stable window for up to 3 years, although that could change, and we want to understand what other impact, what businesses can do to manage that to help us mitigate that risk.
Okay, great, thanks. Just to come back to you, Mike, on some of the employment numbers, our numbers are just under 800,000 in the wider sector and 160,000 people directly employed in manufacturing within the sector itself. But look forward to talking to more of those after this webinar with you. Right, I think we are pretty much at the end of the session. I'd like to say thank you to Mike and to Kevin for joining us today, and also for all of you out there for taking the time to join us. Any questions, there's an email address there, please send them on to us. We'll be happy to forward them on and try and get an answer for you. The slides will be available after the session, and I think that's all. So thank you very much. Have a good day, everyone. Thank you.